Welcome everyone to Behind the Markets, the Friday edition. It is Futuristic Friday. To everybody, this is the Friday before. This is the second Friday of February, which is what we call drop off week, coming up very soon. And to some people, it's the week of love coming up. But thank you to everybody who's here with us, and a good morning to you all. My name is Munyumba Mutwale. I am your investment analyst and your financial advisor, here to take you through how markets are doing and how to work out your portfolios, your business, and your market dynamics to help you navigate through the ins and outs of the markets that you need. So once again, thank you to everyone. And this is Money FM. Thank you. And let's get started. Now, looking into the market kickoff in terms of the final day, or let me say the second last day of the market, we are still seeing the kwacha on a slide. We are continuously seeing us going on a negative slide continuously. And this is the 88th day of the kwacha losing value against the United States, or sorry, the 89th day of the Zambian kwacha losing value against the United States dollar. It was down 0.12%, while the dollar is up 6.59% year to date. It's actually been quite a strong asset during this period. Dollar is still on a buying spree. The gold, what I call the gold death cross, still showing that it's in a bull case. Short term is also still showing that the dollar is on a bull march. While it's still in definitely overbought territory, it's a lot of momentum that is built in, so it can be deflated. So always be careful of overloading your portfolio with dollars. Because it is something that can be deflated on a technical basis. But we are seeing the dollar trading quite strongly, and for the last and over the last month, it has had updates. So 89 days of the dollar gaining value against the kwacha. We've also seen that the rand against the kwacha dropped again by 0.13%, another one-day loss. So we're in a seesaw pattern against the rand. It seems around 110. We seem to be sticking around that seesaw pattern and maintaining it continuously. On the week, the rand is down 2.18%, but year to date, it's up 2.34%. So that actually does put a little bit of inflation pressure on us, because remember that our biggest import source is South Africa. So if their currency gets stronger, the cost of the things that we're importing from them gets stronger. So we are seeing that the rand is also in a slight mix. It's got a sell and buy pattern mixed into it and baked into it. So in the FX market, it is a strong dollar wobbling rand. That's what we're pretty much going into today. Now, going into our bonds, going into the bond data, we're seeing that secondary market bonds in terms of trading, not holding, secondary market bonds in terms of trading up again 0.6%, up 3.58% year to date. It's in a decent run, but what we call inflation covering run. So far, we're up 0.06% year to date. It is 31 straight days of that index moving upwards. But we are seeing that in dollars, it is down 0.13%, and year to date, it's down 2.93%. So if you're an offshore Zambian and you're trying to hold your portfolio in dollars, it has not performed well at the beginning of this year, mainly because of the currency drag. So the currency drag has actually erased the 3.5% in local currency and then given you the 5.46% that the dollar has gained. So unfortunately, currency has played a negative role on those who are holding bonds abroad. But in the long term, always remember that Zambian GRZ bonds also always perform quite well. On a year-over-year basis, the GRZ secondary market bond index is actually up 13% versus the 6 to 7% US inflation. So you're up 7% above inflation in US dollars, which is very good compared to other parts of the market. Remember that your S&P is only starting to perform well this year, and other parts are only starting to perform well this year. But year to date, it is not doing too well. And what we're still seeing is that the GRZ bond composite bond index is still around 23.57% in terms of composite bonds. We have seen that this year there hasn't been much movement, but we're seeing bonds in a buying pattern. In other words, yields are coming down slightly. But yesterday we had a T-bill auction, which actually gave us a little bit of a different swing on things, where we saw interest rates go up on T-bills when we were seeing them slightly going down. So already we're starting to see some of the markets are a bit, the primary markets are starting to dislocate a little bit from the secondary markets, and we're getting a bit of a different swing here. So primary and secondary are not moving in the same direction. I think everyone needs to be very careful about trying to base that on each other. I would say to people, it appears what's going on in the primary markets is holding a line. So right now we did also get an announcement yesterday that the bond auction for next week is on 2.6 billion kwacha worth of GRZ bonds reissues in 3-year, 5-year, and 10-year. So it appears what's happening is that the Treasury and the Bank of Zambia are utilizing the 3, 5, and 10-year and trying to turn them into a quarterly issuance by just issuing a fresh ISIN every 3 months and then reissuing it for the next 2 months. So the probable point we're going to see is probably we're going to see the March one will be a new issue for 3-year and 5-year. Then we'll see reissues again. So you will probably see that there is a cycle of 3, 5, and 10-year reissuances happening in those periods because these have been your top performing bonds anyway. So because they've been your top performing bonds in terms of against that, except for the 2-year, they've been your top performing bonds except for the 2-year. You have seen that, especially the 3-year, it has been the star performer and it has got the highest interest rates attached to it. And I think that's why they're going for the 3-5-year is because those two have got the highest interest rates. So they're trying to manage their cash flows at the moment. So always look at what is happening in terms of reissuance. And that's why for those who, even for my client base yesterday, I made sure that I gave them the prices that I expect so that they're able to go and fill out their forms. Remember that your forms have to be in by the 18th. Your forms have to be in, done and dusted by sorry, just getting my thoughts together there. But your forms have to be in by the Thursday of the auction. So in other words, auction being held on the 17th, your forms have to be in on the 16th at 16 hours. So 16:16 is when you're expected to actually make your investments. But remember that the point of trying to build up momentum this year, we talked about this year being a year of momentum, that if you want to try and build momentum, you want to get into the first 3 bond auctions because that will always give you the strongest momentum to go into the end of the year. So get yourself ready for those who are looking for what investments to try and make, and always make sure that you've got some firepower ready for these auctions regularly because these are one of your best times to pick up. Why am I saying this? Also because at the end of the year, I remember that at the end of last year, I was saying that your base case for the first 6 months is to pile into your fixed income market, especially before the offshore investors return. Because right now, offshore investors have already started returning to global markets. You can see them participating in Indonesia. You can see them participating in Mexico. You can see them participating strongly, and you're seeing record levels of corporate issuance and EM issuance. And that means that the appetite for global yield hunters is back. So it appears they believe they've peaked out in the US markets, and they're now going back to try and capture any high yields that are remaining in the global markets. So the moment you start to see these people now start to enter our gates, they will start to go as hard as they can for as much of our bonds, especially those that are sitting in the 7, 10, or even 5-year. That's what your offshore investors are looking for because they know they can get good cash flow and they can get good yields for their money. So that's what they're really going for, especially weaker currency, trying to see if it'll get stronger. Those are all the points that I think everyone is working on. Remember, the outlook for the kwacha is still supposed to be 16, 17. So it's sitting way above its outlook, though it looks as though we'll be waiting for the central bank reaction. Now, the other thing that's probably going to happen to the currencies next week is when the reserve ratio requirements kick in. So we have to see now if whether the squeeze on currency is going to continue playing out or whether the banks don't think much of that and they're going to continue with the current slide or the current loss of currency value. Now, other parts of the market that we are paying attention to is also the commodity section, which also affects us in terms of our export earnings and our inflation. And the main 2 drivers of that are copper and oil. That's what you always look at. Copper is still up year to date, up 7.41% and up 0.83% yesterday. But on the month, it's had a really, in the last 30 days, copper has had a really bad month. Because obviously the Federal Reserve has said that they're going to continue to be hawkish, but there is some good news that we're seeing from copper. Though metals demand like zinc is starting to flatten, in China, what we are starting to get, or we are seeing in China, is that SMEs are showing positive signs in China. So the industrial sector still has some good outlooks. Though China's service sector is growing faster than its industrial sector. So that's another factor to take into there. The other thing we also have to take into consideration is that Elon Musk yesterday announced, Tesla yesterday announced that they're raising the prices for their Model Ys in China. That's a good signal because that means that there's still strong demand for EVs in China, meaning industrial demand is still needed. Remember that he's got a Tesla factory in Shanghai where he produces, meaning that some of your copper also has to end up there. So that's good for copper export. So we are seeing that for copper, there should be a pickup here because China still looks like it's reopening. China still looks like it's doing fine. So 8,933. Even with slowdowns in the housing sector, copper has remained strong mainly because of the electric car sector. Remember, electric car demand is growing by about 40%. 40 to 60% annually. In fact, last year it was about 69%. Now, what we're seeing as well is that crude oil dropped down by 0.73% yesterday. We did see that on the week it's up 5.7% on positive signs. But we are seeing that crude oil is coming down mainly because of the barrels and the inventory in America. That's what's showing there. And then finally, we're also looking at gold. In dollars, gold was down 1.08%. Recession fears are starting to recede a little bit. But in Kwacha, it was down 0.97% as of yesterday. But still, year to date, gold is up 8.92%. So if you're going to pick your currency assets year to date so far, it's still gold number one, then dollars. But then obviously the crypto assets have done big, but they really took a slashing yesterday. If you take a look at yesterday, crypto assets really took a beating. Bitcoin in Kwacha is down 4.61%, while Ethereum in Kwacha is down 5.91%. And on the year to date, yes, these are still up 39% and 37% respectively, but they are down. Okay, so remember that cryptocurrency is extremely volatile. I'm going to say this again. It's extremely volatile. You always have to be careful. There's always a thing that you're always trying to get through. So remember that, or remember that that is a tough swing for everyone. Now, thank you very much. Let's get into now. Let's also look at what this means for oil in terms of our oil expectations. Sorry, before we jump away from that, let's take a look at our oil expectations for the end of the month. Remember that we do our early outlooks on what the oil price may or may not look like. But what we're seeing is that there's a potential for the oil price to be shifted up 1.5. Sorry, we're just going to make that correction here. The oil price has to be able to shift up 1.89% probably by the end of the month. We're looking at about 27.73. So an increase in oil prices is likely by 52 ngwe by the end of the month, mainly driven by the weakness of the currency, even though we've seen that global Brent prices on average are down 1.36%. So we're still battling with a weaker currency that is now reflecting. So should the central bank be able to kick in and change things around? Now, let's take a look at the global outlook, the global markets together. So looking at inflation, we did see that German inflation started to come downwards. That's a very important point. Chinese PPIs rose. So that affects our potential inflation of electronics and electronic goods that might come into Zambia. So Chinese producer price indices rose again. We did see Australia revise its inflation upwards. That's going to affect things like lithium prices probably. Indian inflation is also expected to come up 5.9%. So we're also expecting imported inflation from things that we get from India, imported inflation from things that we get in Germany, and South African manufacturing was down year to date, but a little bit up 0.1%. So that's a little bit of a better sign. So we do see that South African imports may hold a little bit, especially because of the weaker currency and also because they had a little bit of a stronger manufacturing month. But we do see that the Indian inflation and the Chinese inflation may offset that and increase prices. Japanese PPIs have also started to come down. So electronics coming out of Japan will also set to come down. It's down to 9.5%. But Egyptian inflation hit 31% yesterday. That was abnormal levels yesterday. So now we are seeing this mixed bag of inflation around the world. So are all supply chains doing better? No. But are some supply chains doing better? Yes. Yesterday we saw interest data in the interest markets. We saw Pakistan actually say that it's about to reach an IMF deal. So we are starting to see a lot more financial control coming in. But locally, we saw yesterday Secretary of the Treasury Janet Yellen has pushed for China to actually speed up on reaching a resolution. So she is pointing the finger at China while China's pointing the finger at her. And this is why I said one of the biggest risks to Zambia and the interest rates that we're facing is what we call the Chimerica rift. There is a financial battle happening between China and America, and it's constantly showing. So that Chimerica rift now is actually getting even stronger and stronger, and we're seeing that words are being lobbed between each other. Yesterday, as I said, we did see Chinese data showing flattening metals demand, but we did see that, or steel demand, let me say, but we are seeing SMEs are actually improving in China. That's industrial. Now, for Zambia, biggest news yesterday that came out was load shedding has been announced to have come to an end. Apparently, it ended 12 days ago. That should be good news for us to be able to come back. So, therefore, inflationary pressure from low capacity utilization of factories should be offset now. But we should be looking at what are the implications of load shedding having ended. Are there more costs? Because Zesco has given a proposal for its fees, but whether that's going to go through, that's a different story. I'm sure a lot of people are going to try and fight it. Then they'll load shed you again. Then you'll have to put it back up. So my suggestion is fight this one differently. Now, looking at income, global income yesterday, we did see that Unilever said they were being dragged by inflation, by high costs of things. So Unilever being an indicator or barometer of global growth, because it's one of the biggest multinationals around that actually gives a lot of consumer products around. And they're saying their figures are being dragged by global inflation. And they're saying consumer demand is actually slowing down due to global inflation. So that's a quick indicator, the fact that the consumer is still struggling out there. Chinese CPIs fell as well, showing weakness of the Chinese consumer as well. And finally, Malaysian GDP was up 7% and it was above expectations. So we are getting some Asian bump ups in terms of inflation, in terms of growth. So what are we seeing still? We're seeing that we're seeing that growth is still fragile. Interest rates are still declining, but though they're still getting weaker. Inflation is lower, though you're still getting these up peaks like Egypt, where you're starting to see it with risks of Chinese PPIs coming back. And industrial, you are seeing some strong positive signs. So industrial growth with a little bit lower interest rates, we should be seeing a much better outlook for the markets altogether. So that together gives us all of our read for what is happening around the globe. Now, as of today, I wanted to give you three things today on Futuristic Friday before I go into wealth management. So all of you who'd like to know, what are your numbers for targeting levels of financial wealth? And I'll give you my newly published, we have adjusted our 8 levels of wealth. We've made it into the 5 levels of wealth. We have done an adjustment to it. It's our new addition to it, and it's our new targeting tool. So you want to take notes on this because it will give you a strategy. It's a playbook that we are putting together for you. Now, let's get down to some of what we should be looking at here on our markets. One of the things that did happen recently in the markets is we did get data from payments systems. We did get payment systems data. So I want to quickly open up what we saw in terms of the summary of payment systems data. So just bear with us here. But here is your summary on the terms of things that happen in the payments systems ecosystem. What we did see in terms of payment system, and comes from the cards section, we did see that cards grew, the usage of cards, and sorry if you cannot see, but usage of cards grew to 3.14 million card users in Zambia. So there are 3.14 million cards in issue, with about 39,000 points of sales operating, and with 994 ATMs operating, with 170 billion kwacha worth of transactions were basically done through cards in Zambia. That's up 44% from the previous year, mainly driven by point of sale, which is up 81%. Zambians are swiping almost 2 times more than they were swiping last year. And basically 65% of all card activity is happening through swiping and point of sale rather than ATM, which is only up 4%. So that actually shows you that the biggest driver that's happening in the economy is that people are virtualizing their payments and they're getting quite used to it. We're also seeing that the volumes, obviously, of POS payments were up 34%, while ATM withdrawals were down 10%. Obviously, this is pandemic-induced behavioral change that happened as well. The number of transactions that we're seeing from a card, we're seeing that. The number of transactions that we were seeing per device altogether, we were seeing that POSs were seeing about 3.6. Average POS was seeing about 3.6 million kwacha worth of transactions, while the average card had 54,000 kwacha moving through it. So the average card has got about 6,000 kwacha moving through it. That's in line, by the way, with the salary of a Zambian, the formal sector salary of a Zambian. Which is just somewhere above 6,000 somewhere between 6 to 6,500 kwacha. And you saw that the average ATM was doing 59 million kwacha worth of transactions through the year. So you can see the average POS is up 67% in terms of transactions. So if you are not doing business with a POS, you can actually see that this actually might harm your ability to do business. Let's take a look at the average transaction size. For the first time, we've actually seen point of sale transactions are actually bigger than withdrawals, meaning that card transactions, the average transaction of a card is 1,800 kwacha, while the average transactions of a point of sale 1,818 and 1,800 flat. So that is data that we're seeing in terms of payments, the payment systems that people have gotten used to. Now, there's other pieces of data that came out of payment systems reports, and that's got to do with average price. So with average transaction allotment, or in fact, let's also take a look at the general transaction size. So general transaction size shows that Zambians did 75% more transactions through mobile money. I did give you an announcement recently that mobile money is now over 50% of payments, and this is the first time a payment system is actually dominant since we were using checks. Check payments used to make up more than 50% of payments back in 2010. Today, it's mobile money payments doing that, while check payments are now down to 1%. As we were saying, there's some people in this country who are resistant to change. But we did see 590 billion kwacha worth of transactions being done in the retail sector. That's up 49%, mainly driven by mobile money, 74% rise. We did see a 16% rise in electronic funds transfer, which was up 16.7%, up 115. But the strongest riser was point of sale, up 81%, 115 billion kwacha, while ATM, remember that ATM is now only making up 59%. It's now the fourth place, while check is only 8 billion kwacha worth of transactions. Now, this is actually quite interesting because we're seeing the virtualization of Zambian payments. Zambians are getting used to doing payments virtually, and this is very important for doing business. This is very important for people doing business in this country, because now you're seeing what your consumers are doing. And if you're not in line with the way your consumers are comfortable making payments, you will struggle to then gain as much business from your consumers. Just a quick read also in terms of movements in and out of currency. Movements in and out in terms of remittance. We did see that remittance flows, before we get to remittance flows, the average size of transactions, we did talk about that. The average transaction in Zambia on systems was only about 350 kwacha per transaction versus 427 as of last year, and mainly driven by the decline in mobile money, which went down from 187 kwacha per mobile money transaction to 203 kwacha to 187 kwacha. Electronic funds transfers have risen to 12,200 from 11,500. But while you're seeing the battle between point of sale, which has gone up from 1,000 to 1,800 from 1,300, versus ATM transactions, which are 1,800 from 1,540. Check transactions have come down from 716 to 6.7 thousand. So eventually, this map here gives you an idea of what amounts of money your customers are comfortable paying with. So if you're looking at trying to do mobile money transactions, it's probably business, it's probably goods and services that are less than 2,000 kwacha in nature, 1,000 to 2,000 kwacha. If you're comfortable with point of sale and ATM or cash, or trying to get people to pay cash or do POS, then you're doing transactions that are above 1,800, going all the way to about 6 to 10,000. So this is where people are comfortable using transfer mechanisms. Any transactions above 6 to 12,000, that's where people are more comfortable using a direct banking tool. So out of branch things are for things that are below 6,000. So this gives you an idea also as an entrepreneur of what payment methods are suitable for what cost of product. So this should also give you an idea as well. And finally, it's to look at also what's happening in the remittance space. And what we saw with remittance is we saw a decline slightly in net remittance of the country, mainly because of the strength of the currency. So when the kwacha gets stronger, two things you start to notice is that Zambian subcontractors who do work outside in the global economy, people who earn money, gig workers who have been making money outside, whether selling on eBay, all sorts of things, Zambians are doing less of that making money because they now cost a bit more because the kwacha got stronger between 2021 and 2022. So that obviously pushed that down. And the second thing that's a huge driver of what lowered some of these remittance is that Zambians abroad slowed down their building projects. So you saw net remittance drop from 150 million kwacha, the all-time high it was sitting at in 2021, down to 127 million kwacha, down in 2022. So that was mainly because of a slight growth in remittance inflows and a strong growth in remittance outflows. So a slowdown in remittance that was coming into Zambia from offshore Zambians sending their money back, while a strong push. Now, what I always give Zambians who are abroad advice on how to manage currency, because this is where they usually struggle about wealth building. My key for Zambians abroad is this: when the currency is strong, go into bonds. When the currency is weak, go into housing. So if you want to try and build your portfolio, it's cheaper to build a house when the currency is weak, and it's better to build a bond portfolio when the currency is strong. So that's how Zambians abroad should navigate investing back in Zambia. So a weaker currency like what's happening now, this is the time to start pushing yourself to make investments. And the good thing that you're also seeing, especially with the mortgage market, the growth of the mortgage market in Zambia, is that mortgage operators are now trying to even look at the Zambians abroad. So this is a signal to those who are abroad. If you're looking at ways to build your wealth portfolio, because remember, over 98% of Zambians still have their Zambian citizenship. Even those who have children abroad and families abroad with people from abroad still seem to have their Zambian citizenship. Maybe it's also because some of those countries are difficult. So if you want that option to return to Zambia and to start investing, to start investing back in this country, then what you want to start doing is, and also giving yourself that insurance policy. Because I always tell people abroad, you want to have an insurance policy in case you have to return back to Zambia. The question is, return back to what? Because the biggest hindrance to most people abroad coming back to Zambia is, what am I returning to? Maybe the flats I built are not as marketable. Maybe the money I haven't stored up enough. So it's good to store back money. Now, a lot of people try to balance, oh, what about the dollar? What about the currency? Always look at what you're going to be spending your retirement in. If you're going to be spending your retirement in kwacha, then invest it in kwacha. But if you want to try and diversify it a little bit out, you can. I mean, obviously, you have that option of at least keeping about 30 to 50% of your money abroad in different assets and then keeping it back in. So that's what you want to be doing. And that's a way to try and read in for the remittance market. That is the best way. And I think that's what we should be marketing to our Zambians abroad, of how to invest back into our country, and also how to invest back into their country so that they can build their wealth portfolios safely. Now, today in my Futuristic Friday read for the next 5 minutes, I want to read something to you called the Eurasia Group's Top 10 Risks of 2023. And I think we have Vernon finally back in here with us. Good morning to you, Vernon, as we get into our top 10 risks. How are you doing?
I'm fantastic. I'm great, thank you. It's been an interesting.
Yes, it has. And however, we will hold the ship and continue it moving. Now, let's take a look at the Eurasia
Absolutely.
Group top 10 list. Eurasia Group is one of the top investment groups out there that gives strong advisory notes. And here's what we call their top 10 risks of 2023 in terms of global risks. And I'm going to try and interpret what these mean even for Zambia. Okay, so I'm going to start from number 10 backwards. Number 10 is water, floods, and droughts. These are actually affecting food. And this one, I think, is one that's not even number 10 for Zambia. I think this is number 1 because this is going to affect a lot of our food supply. The amount of floods that we've been seeing, not just those floods where we're seeing hotels underwater, people's houses are getting flooded, even though we spent 300 million on trying to fix our roads in Lusaka. Yet we're still flooding $300 million. My goodness, money's never used properly in this country. But anyway, water and floods is the number 10 problem. I think for Zambia, this is probably number 1. You've seen that floods have really become an issue, especially because load shedding has finally come to an end. Because finally the floods got to Kariba. It was flooding everywhere except Kariba, and finally the floods got there. They tried. These people think we're in standard 2. You know, I'm telling you, sometimes I think they think we're in standard 2. But anyway, the second thing that we're actually seeing, number 9, they're seeing the rise of the social media activist generation. Now, this is actually relevant to Zambia because policy is now driven by social media activism. Like the moment the president, who's also very active on social media, has to mainly read the pulse on social media for things. So what it does is it slows down his ability to make policy decisions, because he has to always think about how it's going to look. And so for Zambia, this is a big thing. I mean, our last election was basically won through social media. So it shows you that social media has a very strong clout over politics. Even if you look at things like South Luangwa, what's happening there in terms of the battle over mining rights there in there. A lot of that battle is being fought through social media and then being brought to policy levels. So the rise of social media activist generation, who now believe in rallying through social media and bringing up a voice of displeasure of things, is actually a risk, in that politicians have to now always factor in public sentiment in making decisions, and no longer, I wouldn't say it's a negative risk. It's actually a positive risk to a degree, but you can get usurped by wokeness if you're not careful as a country. Political polarization and extremism is another problem. It's around the world. Unfortunately, due to the social media tools that we do use, there's a lot of political polarization, just social polarization. If I'm this party, I'm this party, and everything I see about the opposite party is negative. If I'm this party, I'm this party, and everything I see. And society is now at each other. We use terms in Zambia like the 1.8 versus the 2.8 million. That is something that is political polarization at its peak in this country, and everyone is seeing things directly through that lens. Now, it creates the populism versus professionalism battle as well in this country. So I think this is another one of the top ones. I don't even think it's a small one. What we're seeing also as number 7, they've put there, is what we call geosynchronous slowdown. A geosynchronous slowdown means the world as a whole is not growing as fast as it used to. So we're probably going to see economic growth slow down globally, which means that it'll affect a lot of our export markets. And this is why the rise of regionalism might be a better move. Zambians exporting to regional markets as opposed to trying to always export to countries like China, whose growth this year has had to be ratcheted down to 4.7%, except down from the 8% that we were all hoping for as a world. So our export markets need to be diversified in order for us to not feel the brunt of geosynchronous slowdown. The energy supply crunch. Right now, because of the whole Russia dislocation, Europe is buying record levels of oil. And what they're doing is they're keeping the price up. That affects us. That's a direct inflation problem for us. And that's why oil, for the first time in over a decade, has actually stayed above $80. We've actually gotten used to the last decade of seeing oil between $30 to $60 a barrel, though our currency is what's been playing against us. But it's really this elevated oil price that is now sitting on us. Now, an unstable or dictatorial Iran, sure, that's a problem for the US. That's not really our issue. Though I'm sure, yes, everyone's talking about a Middle East war and those things, but that's got very little to do with us. An unstable Iran really hasn't got much to do with us. It just makes it tough for people to make nuclear power stations. But let's be honest, we're struggling with hydro. I don't see us going to nuclear anytime soon. Global inflation is also a big risk around the world. We're also seeing that the global inflation read is also a big thing because we're importing inflation. But this risk is starting to slow down. It's still pervasive. Food prices are high. And I would say global food inflation is actually an opportunity for Zambia, because export companies like Zambeef can then take opportunities like that. We're also getting our food exported. Agri exports are growing faster than any other group of exports in Zambia. Remember that they're up about 25% as of the end of the year. And we're on track to see $1 billion worth of agri exports this year, and on track to see $2 billion worth of agricultural exports by 2026. 2026 going on to 2027. So that's actually good news for Zambia if we just keep our heads straight on this one. Social media politics is also another big risk. I think this is us as well. Politics drawn out on social media is a big risk for us as a country. Because nothing can be said without seeing it through the lens. Things spread like wildfire on social media. I'm not one for social media censorship, but I'm telling you that is one of the biggest things. It is a threat to us as a society. Xi Jinping at full power is a threat to America, not us. That's an opportunity, because America sees President Xi as a threat. Then obviously President Xi is also trying to be very strong and powerful because he has got no more term limits to deal with. For us, Zambia, that's an opportunity to play America and China against each other and not pick sides. The worst thing we can do as a country is to pick sides. And number one, they've said, is rogue Russia. Obviously, Russia being in the state it's in is actually causing a lot of global instability. Look, there's a potential for a war. That's the biggest problem. Russia, I think, is creating the potential for a world war, which is a huge threat even for us, because world wars stop trade, they stop activity, they spread around, they create volatility, they create global depressions. So the reality is that Russia is capable right now, in the state it's in, of actually causing it. But one of the things Russia is doing is that they're speeding up the dismantling of globalization and the transition to regionalization. So, in other words, our trade partners should no longer be the north of the world. Our trade partners should be continental and neighborly. That's why trade deals with countries like Kenya, Tanzania, Namibia, Botswana, these are extremely important, much more important than the ones we are making with the Western world and the ones we're making with China. Those are secondary to our region, because the future of the end of this rogue Russia situation is, it appears trade is going to be very regional. China has done record levels of trade with Russia. So we're actually seeing that kind of that probability in terms of this. I'll post this up for everyone to look. These are the top 10 risks from the Eurasia Group. And finally, Vernon, it being Futuristic Friday, today I wanted to give people a little bit of something I call wealth targeting, something I wanted to see on how to make investments yourself. And I'm going to give you my 5 wealth targets as we wind up here today. These are my 5 wealth targets. This is a new edition of my 8 levels of wealth, which we showed earlier. That was an old document that we used. We have been working on a change of it called my 5 wealth targets. And these are the things you should be looking for. The first thing I want to tell people is this is the history of national salaries in Zambia according to the National Pension Scheme. People don't like this data because it shows them how much they earn and how close they are to the average. Because everyone goes to their boss and says, "Boss, I'm not earning enough." And then the boss says, "You know what the average is in Zambia?" And then you're like, no. So the average salary in Zambia as of 2021 was 6,109. At best, you're probably going to see it at 6,500 this year. We're waiting for the NAPSA figures, which have come out, but we're just waiting to consolidate them and compile them, add them to this. And we will publish them once we get them. But we have seen that the historic national average of salaries was 6,100. This was where they were going. And this is basically gotten from NAPSA, who captures 950,000 people. So I think they're statistically significant in terms of the amounts they're showing us. This is the 5 levels, my advisory targets of wealth. So here are the 5, and I'm going to read them out to you. Take notes on where you are. And I always tell people, wherever you are, make sure you cement it. And over the next 5 years, look to get to that next level. So level 1 is financial stability, which means you've established a wealth building base. You're on a budgetary surplus, meaning you're earning more than you spend. You are debt free, at least maybe for long-term debt. If you have a mortgage, that's 5% fine, but I doubt you do. You're debt free, and you've got 6 months of reserves, of cash reserves. In other words, 6 months of spending. That is called financial stability. That's establishing your base. Target wealth, we should be looking at somewhere around 100,000 kwacha in liquid net wealth assets. Number 2 is called financial strategy. Your money is in wealth building formation. You can survive 5 years without work income if you were to liquidate your wealth assets. That's a target wealth of somewhere around 500,000 kwacha. The third one is financial security. You can survive without income. You can actually survive, though I'm using the word survive, people, not thrive, not live your best life. Survive without income. Okay, you can eat, you can sleep, you can make it. Okay, that means your passive income from your financial assets is equal to 1 times your household basic needs. That's 1.25 million kwacha worth of financial assets like bonds, stocks, unit trusts. Those are the ones I always think, rental property, and there's a calculation we give for that. Financial self-reliance, which is what we've termed for financial freedom, means you don't depend on work for your wants. That means your passive income from your assets should be 3 times the basic needs, and that is a 3 million kwacha target that you're looking at. 3 million kwacha target of wealth assets. And financial self-determination means you are free to pursue your dreams without fear. That means the passive income from your wealth assets should be equal to 5 times your basic needs. That is a 5 million kwacha wealth target. Now, how do you want to get there? Very quickly, here's a quick table that I've given people of recommended monthly investment targets that you should be looking at your starting age. So this is how much you should be saving and investing per month in stocks, bonds, unit trusts under the advisement of a financial advisor. And these are called recommendations. They're not assurance. I'm going to repeat that word again, Vernon. Recommendations. Okay? These are recommendations. People like to come back and say, but you promised. It's not a promise. It's a recommendation, giving you an idea of what you should be looking at. If you're 25 and you want to by age 60 be financially secure, 592 kwacha is what you're supposed to be investing monthly into the assets we told you. If you're 25 and you want to be financially self-reliant, 1,422 per month. And if you want to end at financial freedom, 2,369 per month is what you should be looking at. If you're 30 years old and you're starting from 920 for security, 2,200 for self-reliance, and 3,600 for financial self-determination. If you're 40, I'm going to skip to there. You should be looking at 2,300 kwacha invested per month to end at 60 by self-reliant. In other words, in the next 20 years, 5,530 per month to be self-reliant. The other one was security, and 9,216 per month if you want to end at financial freedom. So you see that, or financial self-determination. So you see, the younger you start, the smaller these numbers will have to be. Capture this, you'll see it out. And we have put here, if you want lump sums, these are the numbers in thousands of kwacha. If you just want to invest one single lump sum, leave it in assets until the time you hit 60, that is also what you need to be looking at there. So this is what we call wealth targeting on Futuristic Friday that I wanted to give as many people to look at. Take down your numbers. Look at what you need to be looking at in terms of your next 5 years. Okay, look at what you're looking at in terms of the next 5 years. And if in terms of your wealth level, always look at the next level of wealth as your target for the next 5 years. Calculate something. I'll be talking about how to break it down into a task going over the week, and we'll be reverting back to the journey through these 5 levels of wealth by each age category, looking at how you should be behaving, what you should be focusing on, and what notes you should be taking as part of your strategy. Vernon, I rest my case for today, for the week, and I will see you next week, my brother. Have a wonderful week, and God bless to everyone.
Thank you so much. Always a pleasure to have him.
Thank you very much. A nice day, everyone.